Okay, we are live. The Prospero.ai stock market live streams. Welcome back, everyone. Happy 2025. Welcome to the stream today. We are going to get into a bunch of great topics. Um, let's have a great 2025 of investing, of doing these live streams. Hopefully, we can provide some value with the Prospero signals, our live streams, everything that we offer for you guys. Hopefully, 2024 was a great year for you in the stock market, but if it wasn't, 2025 will be better. There's a lot of opportunity to come, and if it was, there's always things to be stacked upon each other. So we're going to have another great year. But today, what we're going to get into is the kind of pulling of the bulls and the bears in the stock market. As it opened up today, it was green and then it went red, back to green, back to even more red. And right now, we are fighting our way back, but we are still red. So, who will win in the early part of this year? Our signals are pretty low for the QQQ and the SPY in terms of net option sentiment, but we'll get into all of that good stuff and some of George's goals, his mindset when the calendar flips over and the new year begins. For our Tesla shareholders, we got some news that sent Tesla stock lower today. It's down about 7% at the current moment. There was vehicle delivery numbers that came out and were disappointing. So how worried should our investors of Tesla stock be from this news? Is it going to last and weigh on the stock in the long term? If you're a longtime viewer, you probably have heard us talk about Tesla bullishly recently. There was some Trump trade stocks that we were highlighting a lot. Tesla, Coinbase, Palantir were some of them. But our signals actually went a little less bullish on Tesla recently. So maybe they saw this news coming, or maybe the rally just had played its course. But either way, we'll talk about Tesla stock. And spinning from Tesla stock to another one of the mega cap companies, NVIDIA had one of the best years ever last year in 2024. For the first time ever, a company added $2 trillion to its market cap. So pretty mind blowing. But I want to ask George when he gets in here after we talk about Tesla, if Tesla can be this year's NVIDIA, because they're in a sweet spot where they're a 1.2-ish trillion dollar company. So they're several trillion back off the leaders. I think Apple is the biggest still, just below 4 trillion. And they're kind of in a similar spot where Nvidia was last year, where they're about just over a trillion. They have a big FSD update coming out at some point, which is kind of like the chat GBT moment, as some people are calling it. So they're in a position where maybe if things break right for them, they can be the second company ever to put 2 trillion onto their market cap in a year. So we'll get into all that good stuff. Then we have some stocks that we haven't talked about in a long time or ever, maybe. I'm not sure the first stock, Topgolf, we have ever talked about before, but we have upgrades for several companies. So Topgolf was down 30% last year, but Jefferies is going bullish on them, raising their price target, and the stock was up off of that news. Let me check right now to see if it was able to hold on to those gains today, or as the market went red, if it went back down with it. I think it was up over 13% at one point. Let me see if I could find it. Ticker MODG for Topgolf. Still up just under 12%. So, beating the market by a lot today. A stock that's beaten down like that, maybe they could get on a good run. But what's going to be important for us, for a company where their business is relying on the consumer, is that the consumer remains strong. So we'll get into all of those details. And maybe for other companies that are reliant on that type of a consumer, if 2025 will be a good year for those stocks. Another company like Topgolf is Cloudflare. They got a double upgrade from Goldman Sachs, which seems to be one of the most respected companies that covers Wall Street. And it was a huge upgrade from $77 to $140 price target. So we'll highlight Cloudflare, the cybersecurity space as a whole. I think I saw a news story about some Chinese hackers recently taking place. So, cybersecurity remains in focus. It had been in focus, but I think that industry is kind of, just growing. And Roaring Kitty is back. He is posting on Twitter in what was called a cryptic tweet about Unity, as people are theorizing, he didn't actually say which company it was, but it sent Unity stock higher in this meme stock era. Roaring Kitty, is pulling all the strings. Um, and Unity is another company that never really recovered from their pandemic highs. I want to talk about the gaming sector as a whole. I've seen a lot of people discussing Roblox recently. It's one of those stocks that went public when the markets were kind of a little bit juiced and never really recovered. But recently, it has been uptrending. So, is Roblox an interesting investment? Is Take Two an interesting investment with GTA coming out at the end of this year? The gaming sector as a whole, maybe this is their year to take a turn in the entertainment space that has done so well with stocks like Netflix reaching new all-time highs and just crushing it last year. So I want to highlight Netflix. And then to end the stream today, we're going to discuss a company called Starbulk, which is in the maritime industry. I have a friend who watches these live streams. I don't know if he's watching right now, but hello, Anthony, if you're in here. He works at this company, and he's been buying the shares because he works there and he's confident in the business. But the stock just keeps going down. The ticker is SBLK for anybody who wants to look them up right now. But I want to ask George, how should someone feel about that type of a situation as an investor and a worker when you work for a company and you feel like things are going well, but the market just isn't respecting and isn't rewarding this your company. So, what should you do in that case? I have a feeling he'll probably say, "Look at the Prospero signals," but we'll see. And last but not least, Jimmy Carter, R.I.P. Jimmy Carter. He died at 100 years old, and the stock market will be closed because of it. But you're gonna have to watch till the end of the stream when I give you the exact date and ask George if this is a normal thing or not, because I can't remember since I've been following the stock market, it closing on a date that isn't like a federal holiday or whatnot. So we'll get into all of those details later on in the stream. And of course, end it off with the model portfolio, the first of 2025 at the very end. We have George in here. Welcome, George, to the stream. What I want to do in the early stream today is look at the SPY and QQQ net option sentiment as it's leading us into our first topic. Beautiful buy signal on SBLK today from George Bow. Interesting. We will discuss that later.
Hey,
George
Steven.
Bow. Hello, George.
Can you
Happy
see, is
holidays.
this like, how does the camera look? It looks very bright here.
I can't hear you. Let me see if it's me or you.
My mic looks good.
I think it might be me today because
yeah,
I hear nothing in my ears, which usually I do. So see if I can mess with the audio while I'm in the stream. I feel like I might have to. It might be me.
Can
and
you hear
not
me now?
you, and I might have to leave and re-enter. So let me try that very quickly. I'll be right back, everyone.
Okay.
Comment if. Wait, Jonathan says he can hear George. Yeah, so it's me. So I'll be right back. Sorry, everyone. I'm just going to leave and come back right back.
How does my camera look, Jonathan? It feels very bright. I don't know. I don't know what the deal is with the brightness today. I think that's the right direction, right? I think it liked that direction.
Okay, testing. Can I hear George? Hello?
Can you hear me?
Ah, I got you loud and clear. Okay.
I'm working on the camera brightness. Does this look better than before?
Yeah, it looks, here, let me make you big and see then. It's easier. Yeah, it looks good to me.
Oh, it looks good.
Yeah, it looks good.
I think I might have gone here. Let me tell me if this is better.
Yeah, it's perfect now.
Great. Yeah, it's a little bright for me, so I can't see very well, but that's great.
Bright for 2025 because we have so much opportunity in the market. I pulled up the SPY. Its net option sentiment is at 3 right now, so maybe it's opportunity to the downside. QQQ is at 7. We're seeing
Yeah, things
some
have been looking bad today.
we're seeing some tug and pull back and forth. It seems like the Bulls and the Bears are fighting. I'm wondering if now that the calendar is turned over, if there's a lot of funds available where people can make new bets, bullishly or bearishly, depending on how they feel. And that's why we're seeing kind of this back and forth. And it seems like the Bulls have won throughout the day, although we are slightly coming back right now. So it's not over just yet. But we see the net option sentiment level so low. How are you feeling about the markets? And that question I have of like, is liquidity now available for funds who want to position differently? That kind of adds to the volatility.
I am almost with you. I just have to send the stream out to a few more people. It's been a slow start to the year. One more person, and then I'm with you. So the market is looking, I think we have some surprising kind of up movement, but I think it was getting a little too beat up to end the year. But I think you have people very scared from the action today, hence QQQ and SPY net option sentiment looking so low. So, we're staying even long short. I haven't compiled the new page, but I think we're doing pretty good to start 2025. Our winners definitely outweigh our losers. And we're pretty even long short. But yeah, I think we have a very apprehensive market to end the year, and I think we see a lot of hedging. I'm not sure if we're seeing money come back into the market yet, like deployed at the beginning of the year. Generally, that is what you see, but you might basically see, as we keep saying, see some money stay on the sidelines until we get a little more tangible evidence of exactly what the Trump administration, what policies they're going to pursue. And, especially if you're talking about, he obviously does a lot of executive orders. That's become something that a lot of presidents do more than in the past. So I think we might get answers very quickly, and we might just have people on the sidelines until we start getting those answers. But I haven't seen any indication one way or the other yet of people standing on the sidelines deploying capital. There's always going to be some people just moving positions around to start the year, but that's moving them around. They could be moving them into risk off into hedge positions more. They could be moving them into the positions that they actually plan on holding. We don't really know that yet.
And so I wanted to ask you personally, what your goals are for this year, because I feel like you kind of judge yourself on your ability to outperform the markets on a yearly basis. And if I'm not mistaken, last year was our best year yet.
Yeah.
Are you excited for the opportunity? And is it like a new challenge and a new level of motivation for you? Because you were kind of like stuck in how you performed, at the very end of the year, because you can't really make too many changes in the performance. But how excited are you at the opportunity? And for people who are newer to our Prospero community, like, how do you plan to do that?
First of all, happy New Year to you as well, Kushal. Hopefully I'm pronouncing your name right. Yeah, it was a great year. And I think first and foremost, what I always try to teach is just to apply a sound process, right? I'd love to beat last year, as I would say I love to beat, 2 years ago this year. But, I think the important thing is you don't have to press. Like, I would be very happy to have a year that just beats the market, not beating it as significantly as we've done it. I just want to do better than the market. Like that's what I plan to deliver. So I do try to hit that benchmark. And I do try to do that by reading what the market's doing, playing good defense, and then, picking your spots and taking on risk when it looks like a good time to take on risk, which I don't think right now is a good time to take on risk, which is why we're even, pretty even long short to end the year, dead even in our investing high conviction portfolio, 6 long, 6 shorts, and a little more long than short on the trading portfolio. But we might adjust that today based on what we're seeing. And so, yeah, I think what we're looking for is to figure out how to manage risk well to start the year. And then, I think when Trump officially takes office, I think, if all goes to plan, I do think the market will be doing better then, feeling a little more sure as we start to see some of these policy decisions, and we'll take some bigger swings then. Or if net option sentiment starts going a little up as his inauguration gets closer, we might taking the swings then. But for now, we're really just focusing on playing good defense, figuring out when it's good to make picks. Like a perfect example is, we saw app loving doing very well in our signals today. And we thought about, maybe closing out some of our other positions and adding that. And we might do that at close today, but we didn't really see any reason to close any of our current positions, which means we didn't want to open up any new ones. But we'll keep looking at that. When with QQQ net option sentiment so low, we were a little hesitant to take on a stock that's been pretty volatile lately. AppLovin's had some big days up, big days down. So we'll look at that. But that's a perfect example of something that we probably would have 2-3 weeks ago added to our portfolio this morning, but we didn't add it today because we're a little more risk off.
Mm-hmm. Yeah, and one of the more surprising stats that you highlighted towards the end of last year was the fact that you had so many more actual short positions than long over the course of the year, about 100 more. Do you anticipate that type of action playing out again this year, as you're saying you're going to be more defensive over the course of this year, or is it too early to tell and that's kind of just something that plays out as the cards are dealt throughout the year?
Yeah, I mean, I think the big thing for us, I think that'll end up being that way. Oh, the stream froze. Is anyone else getting a frozen stream? I think we're looking pretty good, right?
Yeah, I got it pulled open on my phone and it's still going, so
okay.
I think it's okay.
Yeah, everything looks smooth for me. Sometimes it looks a little delayed here, but looking good. All right, so that's generally our strategy, right? When we talk about high level, we play defense with shorts, and then we're looking to hit home runs with tech, consumer, cyclical, healthcare, things like that. Based on what's looking good in the signals. And, that's just our general strategy. Sometimes we'll weight more sectors like, a big difference was 2023 was pretty heavy consumer cyclical and 2024 was much more heavy tech, right? I'm expecting it to be more heavy tech again this year, maybe even financial services, because that's something that has done well. Or I should say financials has done well since Trump has taken office. Since he won the election. So I think maybe that if there's a sector that I maybe expect to play a bigger role in our gains this year, it's that, especially with something like Coinbase being in financials. And obviously that we expect that to be a big long for us this year. But other than that, yes, I think we expect to play a lot of defense with shorts, especially how the year is starting off again.
Okay, so you mentioned Coinbase, and they were one of the Trump trade stocks that we had been talking about towards the end of last year. Coinbase, Tesla, Palantir, I believe were three of the most ones that we highlighted. But Tesla today is actually down 6%. They delivered some bad news about their deliveries. It was the first time they declined year over year, disappointing the market, and the stock is getting hit down 6%. So how worried are you about this update we got with their business? Does it change your view on them? You mentioned you're still pretty positive on Coinbase. Is it the same way with Tesla, even with this downturn, or what do you think?
Well, I think that's a very important distinction with how our signals work. Tesla's moved its way up to 100 and upside breakout, right? And at times it's been a lot lower than that. I've seen it in the 80s, right? And I think it might have been high 70s at one point in 2024. But net option sentiment is at 70 and it's been lower. Like typically Tesla is one of the stocks that run the highest. And we always say you have to really know the history of net option sentiment of the stock to really place it well. But yeah, we got out of Tesla in the high conviction portfolio. I believe it was last weekend. I could be wrong. Or 2 weekends ago at this point. I don't know, but we did get out of it because we saw net option sentiment moving down, and it looks like that was the right decision. It's been in a bit of a slump, and that's really why, the signals are good and helpful, right? It went down in net option sentiment. It still looks good in upside, so it still looks good at a long-term stock, but in the short term, we don't like it. We'll look for that net option sentiment number to go back up and add it again, but right now it's not the best profile we've seen for it in the short term. So we're going to stay away because it was kind of due for a correction, even though we do like it long term. It was running so high relative, and there was no real other news other than the expectation of policy. Like we keep talking about that. And the expectation of policy is different than I think the policy news that we'll actually need. We'll need news when the Trump administration comes in, I think, to continue to move it up. But I do expect that to happen. So we'll look to time that well and look to time it well with net option sentiment going up again, and then we would add back. But right now we're staying away, especially in the high conviction portfolio.
Okay, so with hearing that, I'm very curious on what your opinion will be on the next question I asked, because I wanted to bring up NVIDIA, which was the first company to ever add $2 trillion in market cap. Last year, they did it in 2024. And they actually did it in like the first 6-7 months of the year, mostly. And the last, they've just kind of been ranging for a couple of months now. I was wondering if Tesla is kind of in a good position, maybe a Goldilocks position, you could say, to do it this year, being that they're about a 1.2 trillion market cap company now. So they're, almost 3 trillion behind. Apple is approaching 4. So they're not the biggest company in the world, but they're one of the mega caps that could actually make a move that would add that much market cap. But you're not too bullish on Tesla in the short term. So maybe it'd have to be in the second half of the year or, months down the road. Do you think it's possible for Tesla to make that big of a move this year or no?
I think it's possible, and it's something that we're going to look for, something like we've talked about. We need to see some kind of news on, full self-driving, and or the Tesla bot, and or some kind of exclusivity around full self-driving, some kind of deal with, I would say the US government. Those would be the signals. But if we're talking about 2 of those 3, I think we could easily see that kind of gain. 1 of 3, we're probably maybe talking about half of that as the cap. All 3, I think it could, easily do that and more, right? And I think you're looking at the way Elon Musk is positioning himself. He's kind of positioned himself as like the second most powerful person in the US, and he already had a lot of power before he had, there's kind of the story around the Starlink satellites and providing internet to Ukraine, and that getting him like a large voice in even the Biden administration. But now he's even a little close to that. He's got, potential position in the government that, obviously he's going to use that to help his companies as much as possible. So I don't even think it's even a long shot for him to get 2 of 3 of those things, basically, help for Tesla, either, Tesla cars, full self-driving, either anything with his broader robotics plans. And then obviously any direct contracting that the government could give to Teslas to, roll out as cabs, for example, that those could all be major trigger events to drive a stock to that kind of market cap gain. But it's not, I would not say it's out of the realm of possibility, but we need to see those hurdles before I'm going to say, yeah, this could really happen.
And for the people watching who are listening, going like, oh, that's ridiculous. Tesla's not going to make a move like that. I asked a very similar question about NVIDIA. I don't know, it might have even been in 2022 now. And I did not expect the move to happen. That did. And you were bullish on them. And look what happened. So you never really know how things are going to play out. So we'll have to watch throughout the year how this Tesla story unfolds. I wanted to bring up a stock that we've never really talked about on stream, I don't think, before, probably for good reason, because they were down over 30% last year. Topgolf. They got an upgrade from Jefferies, price target raised to $13. The stock was one of the only ones doing very well today in today's bit of a red market. It's currently under $9, about $8.80. So that would be a nice gain if it were to make that move to their price target. How do you feel about Topgolf and then other stocks like this that kind of require a strong consumer that are going to, their business rely on kind of spending in these discretionary categories. So, yeah, what are your thoughts on that?
Well, I actually had a good conversation about this over the holidays with someone that I was advising on their portfolio. And I'll give the first thing that's highly relevant to this, and then kind of talk about some other advice that I gave. The first part is that they were talking about finding stocks at like lows, mean reversion candidates. And the point that I made is like, that's a strategy that does work. It's powerful for some people, but this is where I say pick a good strategy for retail investors. In terms of mean reversion candidates, that's the kind of thing that a lot of hedge funds are doing deep research on, things like the management team, the turnaround strategy. Like, those can be stocks that can be big winners. But the fact of the matter is, it's very, very hard to identify those stocks. And things like value investing, knowing the management, knowing the business model really well and what they plan to do to improve, is so important that it's really hard to beat, say, a hedge fund in that. It's very hard for retail to get an edge, even when it works. And the other component to that strategy is, what a lot of people don't know is the best single variable in predicting if a stock is going to go up next year is the percentage gain this year, right? Think about that for a second again. So when you're talking about mean reversion candidates, you're basically going contrary to that signal. The most powerful single variable as a buy signal is that, and you're basically saying the opposite. I'm going to try to pick winners out of stocks going the wrong direction. So it's always important to remember that if you think you can snag like a 52-week low stock, those are potential big winners, but they're very, very hard to identify and even harder to compete versus your opponents. And the other thing that I said was, we were talking about them buying CVS options. And it was funny. I was like, not only is that a stock we short, but like CVS options are, there's only so much upside, right? If you're talking about a high growth company, right? And that's what I said. I was like, look, if you're going to buy, Coinbase, or you're even going to buy like a small cap stock that you have a lot of conviction is going to go up in a year, those can be big option winners. But the fact of the matter is, a stock like CVS is just not going to go up that much in the state that it's in. Like, yeah, maybe it goes on a run, maybe it recovers. But again, you're not really the best person to figure out, like in the case of CVS, it's really about saying like, okay, can they close unprofitable locations and improve their business model, improve their margin in some ways as it gets harder and harder to compete with Amazon? The average retail investor is not really in a good position relative to a hedge fund to make that assessment. And even if they're right, the win is probably not going to be as substantial as like a stock that's really on a growth path, right? And I said, okay, compare CVS to like Eli Lilly. And I was like, look, Eli Lilly actually has more revenue than CVS, and it's growing more. So actually, I don't know if CVS was the one with more revenue. It might have been. No, sorry, it didn't have more revenue. It was another company we were looking at. But the point is, it grew 6% year over year when their net income was down 96%. And that's a big thing. It's like they might be down a lot, but look, their net income is down 96%. That is a crazy number. And their revenue is only up 6%. Compare that with Eli Lilly, even though it might be like a little overvalued by some metrics, it grew at 20%, right? And its net income is up 1,800%. Just contrast those two things, looking at those variables. And it's like, yeah, I'd rather overpay for a stock that's growing than, think I might be finding value in a stock that is not growing, especially with that huge shrink in net income.
Well, speaking of that, you made me think about, with bringing up net income going down, the meme stocks. We have a story relating to Roaring Kitty, who is back tweeting on cryptic messages on social media. People are relating his most recent one to Unity stock, although it's not, he didn't directly say that, but they seem linked, and Unity was up based off of that. So looks like Roaring Kitty still holds the power to move stocks even after he's done it a few times, and they all seem to kind of fade back eventually. But bringing up Unity stock, I wanted to talk more about the gaming sector in 2025. We've seen Netflix stock roar to new all-time highs and do so well. And the gaming stocks like Unity, Roblox, Take Two haven't really had that type of move. Take Two has GTA coming out at the end of this year, which we were talking about a while ago now. How do you feel about the gaming companies in 2025? Can they be winners throughout this year?
You all should Google Genie 2, right? Genie 2 is actually like one of Google's Google DeepMind's projects, and it's absolutely insane. I'm bringing it up in reference to I brought it up in reference to gaming, because basically at scale, it's crazy. This thing can create real-time virtual worlds that are very complex. So that technology becoming ubiquitous, there's so many industries that can be disrupted, right? But gaming, especially, if they can create these complex worlds in real time, that starts to be very concerning for companies that are like doing those processes at much more capital intensive ways, much more like human headcount heavy ways. It could be hard for these gaming companies to compete long term. And we might start to see, it's one of those things that we always talk about with AI, and we talk about it with quantum computing. It's like, it doesn't always have to be the fact that like these automated worlds or automated games are that close to competing. It just has to be that perception is there that they will compete eventually, and that could really hurt gaming stocks. So gaming companies, I'm actually concerned with them in 2025 with how fast this technology is accelerating. And Google Genie 2, it's crazy. There's one demo where you can see all of these maybe 50 worlds being created in real time. It's absolutely nuts how fast this technology is advancing.
And people don't think we're living in a simulation, and you have Google and the tech that's 10 years old or whatever, and they're doing that already. It's crazy. And all roads, it's crazy. Like, I bring up topics and I'm like, oh, there's no way this is going to come back to Google or Nvidia or any of the Magnificent Seven. And it seems like all roads lead back to those companies. They're just like dominating the business world.
That's what we always say. For those just tuning in for the first time, this is a nice reminder. It's just be like, what should you own for the next 10 years? If you want to hear my answer again and again, Google, Microsoft, Amazon. And I refer to them as the cloud providers. They're going to be doing a lot more than that in the long term. If you want a set it and forget it portfolio for 10 years, and you might be saying, well, what if Google beats Microsoft in OpenAI, or what if OpenAI crushes Google? That's why you want to own all three, right? You might see Microsoft really start taking the lead. You might see those stocks performing inversely, and you could have a stop loss on Google and keep riding Microsoft if you really want. But I think those three stocks, the next 10 years, you'll be thanking me that you bought them.
Yeah, it does. When you see the growth and the success that those companies have, it does make you wonder, why would you invest in any other company? But I do have a question today from a longtime listener, first-time caller. If anybody listens to SportsX Radio, there's a call out there. But so my cousin who watches the streams, he might be watching right now. He works at a company called Star Bulk, which is a maritime company headquartered in Greece. So maybe you're familiar with them, George. But the stock has been going down over the course of the last year, but he's been buying shares, and he's confident in, from working inside the company, that the business is headed in a good direction. But he is getting concerned because the stock keeps going down. So how would you advise someone like that, who they seem to have, a level of knowledge from working within the company, but the market is not respecting or rewarding shares? How would you go about that situation for him?
The first thing that I'd say is I strongly advise against owning too much of your company's stock, right? Because if you think about it from a risk management perspective, right, especially if it's going down and the company might have layoffs, they might it's a lose-lose for you, right? Because you could end up losing your job, or the company could go down in value, or they could just like not perform as well. They could cut your salary. There's so many like performance. And if you're also getting hurt in the stock, you're basically oversampling the risk, right? We do sports analogies. I think it's the equivalent of betting on your team in a game, right? Because you could have the circumstance where you lose money and you're in for an emotional disappointment too, right? Whereas like the hedge in that situation is actually betting on the opposing team, right? Because either way, you'll get a win and a loss, right? And you'll even out the risk a little bit more. But yeah, I would strongly, unless you have some like what you think special insight into why the market is undervaluing it versus like it just sounds like a general belief. But I'd be happy to like hear a value pitch about it, a little more detail of why he thinks the stock would turn around. But generally, I think it's a horrible idea, and you're better off spreading out and managing the risk than oversampling risk in a company you already work at.
That makes
and that
a
includes
lot
stock
of
options. A lot of people hold a significant number of stock options in their company, and some people don't want to sell it, and they're afraid, and they want to get a tax thing. I always say take the tax hit, spread out the risk. A lot of people are taking too much risk in their companies.
Yeah, don't put all your eggs in one basket. And, with the sports, if you have the first overall pick, like the Giants, don't win a meaningless game. I see a question.
Yeah.
A question from Jonathan in our chat. Is there a specific stock you like, NU, SoFi, or is there another company that you like in the financial sector? Anything come to mind for you?
I think NU that's an interesting name for me. I definitely do. I definitely do like that. I mean, Coinbase, obviously, in the financials, but that might not be what you're looking for. But Nubank as a bank is good. I also like PayPal. That's something that I like long term. But if you're talking about a more traditional bank, I think, this is boring, but I think Goldman's always a good bet. If you want to talk about like traditional banking sector, Goldman, maybe JP Morgan, but Goldman is, kind of my number one safest pick. But that's kind of, I would say, Coinbase, number one pick by far. If you want something that isn't in crypto, I would say PayPal. If you want something of the more traditional variety, Goldman Sachs.
Seems like a lot of the exciting growth is in the fintech and crypto-related finance. Do you anticipate one day that all of these big banks, Goldman, JP Morgan, Bank of America, any of those will like merge, and there'll be some, could you see PayPal or Square or SoFi or any of these more growth companies or Coinbase even merging with one of those big time banks?
Maybe, or you could see an acquisition, but they might be too big for that at this point. I forgot about Apollo, APO. That's one that always looks good in the signals. I probably like that even more than Goldman. BlackRock always looks pretty decent in our signals. But yeah, I would say for the traditional banking sector, Apollo, that's like, I think that's probably the number one, actually. That always looks better in our signals than a lot of the others.
All right. I know we want to do a big update in the model portfolio and turnover at 340 today. So this is the last topic I'll bring up. RIP to Jimmy Carter. He died recently. He was 100 years old, so lived a long life. I saw that the stock market will actually be closed next week, a week from today, on January 9th. And I was a little surprised because I only thought the stock market closed on like federal holidays. I've never seen it close for an occasion like this before. Is this out of the ordinary, or has this been done in the past that you know of?
No, it does happen, but it always feels kind of arbitrary, right? I don't know how they decide it, but it does happen. It's a sign of respect. I mean, I think with presidents dying, I think that's kind of like something where it's more frequent. But major figures, it does happen, and it's definitely a sign of respect. I wouldn't be surprised to see it close for Warren Buffett as a sign of respect, as something like venturing away from president. But like, my biggest problem with it is it's very ad hoc. It seems very like it can seem arbitrary at times. But yeah, for a former president, it's definitely not unheard of. I would say probably more likely than not that it happens. Certainly, if it's like I imagine probably like when the sitting president, that that happens. I don't really know the history there, but yeah, it's a sign of respect.
Mm-hmm. Yeah, and I just wanted to bring that up for everybody watching the stream. Maybe you hadn't heard about that yet, but that's going to do it on our topics today. We'll do our switch over and see you in the Prospero lab. All right, so we'll be back with George in a few moments. He's going to go switch over to the other room where he's got his setup to do the model portfolio update. We wanted to do it a little bit early today because it's the first of 2025, so there might be some big changes. Let me check live at the markets. They are fighting back, although we are still red. When we first started off the stream at 3 o'clock, they were all down about 0.5%. Now they're down about 1/3%. And the IWM, the Russell, is actually leading. It's only down 1/10%. And it was green, actually, at 3:30. So maybe it's not so bearish after all. Let's take a look at the QQQ and SPY net option sentiment. We've had a lot of people in the stream. 1,600 people have tuned into the stream today. Thank you so much for tuning in. I hope you like the topics that we covered. Hopefully you love these live streams and you look forward to when we go live and they help you in your investing. If you do, please like the video. It's great for the YouTube and Twitter algorithm, or X. So let's grow the stream too in 2025. Okay, I have QQQ pulled up. It is at 5, so still firmly lower. And the SPY is at 13. So that is an interesting development because for a while towards the end of last year, we had the SPY lagging by a lot, remaining in like single digits while the QQQ was in the 40s. And now we actually have the SPY, although bearish, above the QQQ. So maybe not so bullish or as bullish as we thought about tech. We'll see how George decides to move with the portfolio today, though. If there's any stocks you want to see us look at while we're live on stream, feel free to comment about it. George, I think one thing that I'm not sure when this switched, but now although they're both bearish levels, the SPY net option sentiment is above QQQ. I don't know if you take note of that and it kind of affects your thinking of how you're going to trade or whatnot, but I just thought I'd mention that because we were seeing QQQ be above the SPY for a while, it seemed like.
Where are we on it?
SPY is 13 and QQQ is 5.
Interesting. Yeah. I'm definitely taking that into account. Share. Yeah, we have. It's been a little annoying for us. We're making an enhancement to momentum score, so it's been down. So it's a little annoying right now.
The strong move for energy continues to be there. We will look to target consumer discretionary on the bear side, which has opened the year in what appears to be a Santa hangover. Too much eggnog. Tech also looks concerning, which is why we haven't loaded up on tech as much today.
We're doing the old way. Oops, that is not what I wanted. The old screener. A lot of China stocks. I'm cutting some of these. What did I do? I'm getting rid of some of these consumer cyclical ones. Oh, is G4? I think that's a. I want to get that in.
Jord is asking about mRNA and our thoughts on that.
How does it look in the signals?
Currently has a 78 net options. Upside and downside are the same at 36 and 37 about. Profitability 10, growth 10. So a little bit mixed, I would say.
I don't generally love it. Like, I'm a little nervous about any biotech stock, to be honest, or anything in that sector. So I don't love it until we figure out what Trump's doing, what I think especially what RFK is doing. I'm nervous overall about that sector, about healthcare.
Hopefully that helps you, Jord.
Core engineering and construction. That's been there. Okay, that's good. just getting rid of some small cap ones that I know are small cap and some duplicate stuff.
Surprising with the weakness we've seen today when I'm looking at a lot of the quantum stocks, like INQ is up almost 5% now. A lot of them are going up, so that trend looks like it's continuing.
Yeah. I think we already have this. I don't think I want to do that either. Okay. I think we want to get. I think we want. Oh, well, it's not really looking good. I think this is a definite. I think this is the short that. Although that's looking pretty good. I think that's more of a. Yeah. Too small. Oh, we already have some ABR. All right. It doesn't add up there, but I'll have to go back and look. It doesn't matter. Okay. Oh, it's 4. Perfect.
First one is in the books.
All right.
Good to be back. Thank you all for tuning in. Here's to a great 2025, George. We'll see you again on Monday. Thanks, everybody.